Welcome back to Investing Talk Podcast. Today we're tackling a question that's probably on the minds of many curious investors, especially anyone trying to uh, make sense of the wild world of biotech. We've gathered a fascinating stack of sources, all centered around one company, Aptevo Therapeutics. And the big question we're unpacking today is Aptevo Therapeutics a good time to buy now? Our mission for this deep dive is to distill the most important nuggets of knowledge from this analysis, help you understand the core drivers, and, well, arm you with the insights you need to form your own informed opinion. We'll look at the company's financials, its promising pipeline, and, the market sentiment swirling around it.
It's important for you to realize from the outset that we're looking at a classic example of a high-risk, high-reward scenario that's pretty much endemic to the clinical stage biotechnology sector. Our sources paint a very detailed picture, moving from significant financial struggles to genuinely exciting clinical trial results. We'll connect these seemingly disparate dots for you, help you understand not just what's happening, but why it truly matters in an investment context.
Before we jump in, if you find these analyses helpful, please take a moment to subscribe, leave a like, maybe comment with your thoughts, and if you're feeling generous, consider buying us a coffee. It really helps keep these conversations going. Okay, let's unpack this then. When you first look at Aptevo Therapeutics, the immediate impression is one of extreme volatility in its stock price. It's been quite the ride for anyone watching. Our sources show a dramatic decline from a 52-week high of, get this, $485.37, plummeting down to its current price of around $5.13. That's a staggering 98.9% drop from its peak. I mean, does that kind of extreme volatility simply scream, stay away? Or does it hint at opportunities? For the brave ones, maybe.
Well, that extreme volatility isn't just common for biotechs. In Aptevo's case, with its tiny market cap and low share float, every piece of news gets amplified massively. It's like a whisper becoming a roar, Makes those surges exhilarating, but often unsustainable unless you're incredibly nimble.
Huh.
For instance, remember that 144% surge on June 18th, 2025, after the positive clinical data, but then it gave back some of those gains pretty quickly. The critical point for you, the investor, is that this company's stock responds intensely to clinical developments, and those shifts can be jarringly abrupt.
So what does this all mean for someone considering this stock? It means we're dealing with a highly reactive asset. A small piece of news can lead to massive swings. You're talking about a stock that can give you whiplash just looking at its chart. Definitely not for the faint of heart. Now let's pivot from that daunting market volatility to the company's financial reality, which is arguably even more concerning. What our analysis reveals about their financial performance over the past 5 years is, well, truly sobering.
It is. We've seen a troubling trend of declining revenues. Started at $4.31 million in 2020, went up to $12.29 million in 2021, but then dropped sharply. $3.11 million in 2022, and then reported absolutely no revenue in both 2023 and 2024, zero. And compounding that, there's a consistent pattern of operating losses, ranging from negative $21.4 million to negative $28.88 million between 2020 and 2024. There was this brief blip of positive net income in 2022, but otherwise consistently in the red. A loss of $24.13 million in 2024. This points to continued significant cash burn, negative operating cash flow of $23.79 million in 2024 alone. This sustained financial outflow is critical for any company, particularly one in clinical development where you need huge investment without immediate sales.
So the financial picture is undeniably grim. Significant headwinds. You're essentially betting on a scientific dream knowing it's a cash guzzler right now. That's crucial context for any investment decision, I think.
Absolutely. But to understand the full high-risk, high-reward equation, we have to turn our gaze from the balance sheet to the lab. Because despite those financial struggles, Aptevo isn't without its powerful scientific strengths.
That's a great segue. They've developed 2 proprietary technology platforms, auditory and adaptive reflex, for creating bispecific antibody candidates. What exactly are bispecific antibodies, and why are these platforms significant?
Okay, think of bispecific antibodies as sort of super antibodies. They're engineered to hit 2 different targets simultaneously. So instead of just blocking one pathway or binding to one cell type, they can, for example, bring a patient's own immune cells, specifically T cells, right up close to the cancer cells. Creates a potent targeted attack. These platforms position Aptevo in a very important and rapidly growing segment of cancer immunotherapy. The sheer number of approvals speaks volumes. The FDA approved 16 new bispecific specific agents in just the last 3 years.
16, wow.
Right. It shows intense market interest and significant therapeutic potential in this, cutting-edge area of medicine.
That clarifies it perfectly. So let's look at their pipeline. Their lead candidate, mipeltamig. It's a T-cell engager currently in phase 1b/2 trials for acute myeloid leukemia, or AML. What kind of results are they seeing from this key asset? And maybe explain what these trial phases actually signify for a company at this stage.
The critical question for any investor here is, can that early clinical promise really translate into commercial success? That's always the gamble. For mipeltamig, the data shows promising early results. An impressive 85% remission rate in frontline AML patients.
85%.
Yeah, that's a remarkable number for this difficult-to-treat cancer. And even more critically, the safety profile has been favorable so far. They noted no cytokine release syndrome in the initial cohorts, and that's a crucial point because cytokine release syndrome, or CRS, that's when the immune system goes haywire, basically. It's a common and often severe side effect of these powerful T-cell engaging therapies, so avoiding it is big. As for the trial phases, phase 1b/2 means they're testing safety and dosage, that's phase 1, while also getting initial reads on effectiveness in patients, which is phase 2. Success here means they can potentially move into larger, later-stage trials, pivotal trials.
Okay, got it. They also have a secondary candidate, ALG.APV527, developed with Alligator Bioscience. That one targets solid tumors. Sources say 58% of patients achieve stable disease in early trials there.
Right. Stable disease is not remission, but it means the cancer isn't progressing, which can be a positive outcome in hard-to-treat solid tumors.
And their preclinical pipeline includes APVO603, APVO442, APVO711, and they just announced APVO455 recently, expanding their potential reach into different cancers. So there's a broader strategic vision beyond just the lead candidate, which is maybe reassuring given the financial situation.
Potentially reassuring, yes. It shows they aren't a one-trick pony, but preclinical assets are very, very early stage. Lots of hurdles still to clear.
Okay. Now let's talk valuation. With a market capitalization of just $3.47 million, that puts Aptevo squarely in the microcap biotech space. These are often tiny, early-stage companies, frequently pre-revenue, incredibly risky, but also offering explosive upside if they hit a breakthrough.
The striking observation here is the contrast. While the current valuation metrics clearly reflect its clinical stage status and financial challenges, things like an enterprise value of about $5.76 million and a deeply negative earnings per share, or EPS, of negative $745.27.
Oof.
Analyst sentiment appears surprisingly optimistic.
Wait, that optimistic? For a company burning cash with no revenue, how? How do you even begin to reconcile those numbers? Is this just pure speculation?
It's a fair question. One analyst covering Aptevo Therapeutics has set an extraordinary price target range, $420 to $5,920.
$5,000.
Yes, suggesting enormous potential upside. The consensus rating from this limited coverage, and it's just the single analyst, remember, is strong buy or outperform. But this is where critical thinking is paramount for you, the listener. The stark contrast between dire financials and that wildly optimistic target. It reveals a common paradox in microcap biotech. Thin coverage often means a single analyst's highly speculative, best-case scenario model can skew the entire consensus. These projections might be more a testament to hope or perhaps the perceived value of the technology if everything goes perfectly, rather than current reality, especially with no revenue.
Right. Good caution there. Okay, beyond the fundamentals, what are the technicals telling us? The stock's currently trading at $5.13 as of June 21st, 2025, which is notably near its 52-week low of $2.81. That proximity to the low suggests significant downward pressure has been in play.
The technical indicators present a mixed, but predominantly bearish picture. The stock is trading below all major moving averages, the 5-day, 10-day, 20, 50, 100, 200-day, all of them. That's a classic sign of strong downward momentum. Now, the stochastic indicator is at 6.45. That shows a deeply oversold condition.
Yang.
Meaning the stock has been hammered so hard it might be due for a bounce, like a stretched rubber band snapping back. Potentially. But the broader trend indicators, like MACD at negative 0.229 and ADX at 40.334, they still scream strong downward momentum.
Okay.
So the technicals are not really signaling an immediate turnaround just yet, despite being oversold.
And for anyone wondering, the beta is 5.73, which tells us this stock is incredibly volatile compared to the overall market. A beta of 5.73 means basically for every 1% move in the broader market, Aptevo's stock tends to move 5.73% in the same direction. Exceptionally sensitive to market shifts and overall investor sentiment.
Precisely. High beta, high volatility, high risk.
Let's shift our focus now to what's been happening recently with Aptevo Therapeutics and what we can expect on the horizon that might move the stock. This is where we look for the next potential jolt to that roller coaster.
Well, key developments definitely include those positive phase 1b2 Rainier trial results for mipeltamig, announced June 18th, 2025. That's a significant clinical data point. Shows promising efficacy and safety that could be a major turning point if it translates into later stage success. They also expanded their pipeline in June 2025, adding APVO 455, which diversifies their future potential a bit. And importantly, they closed an $8 million offering on June 20th, 2025, to support clinical programs and general corporate purposes. That addresses some of the immediate cash burn concerns, at least for the near term, buys them some time.
They also did that 1-for-20 reverse stock split back in May 2025 to maintain Nasdaq listing compliance. That's another crucial piece of recent news. Necessary for compliance, sure, but reverse splits can sometimes signal underlying financial weakness to investors, right? Kind of an artificial price boost.
That's often the perception, yes. It doesn't change the company's value, just the number of shares and the price per share. As for upcoming catalysts, near term, we're looking at more Rainier trial updates. Cohort 3 is nearing full enrollment, so results could come relatively soon. Their next earnings report is estimated for August 7th, 2025. That'll give more clarity on their financial runway, how quickly they're burning through that $8 million. Management has also indicated they intend to pursue potential partnerships. A partnership could bring in much-needed non-dilutive capital and validation. That would be big.
And longer term?
Longer term, continued development of mipeltamig, hopefully moving to phase 23 trials. Progress with the solid tumor candidate ALG.APV527. And advancing their preclinical pipeline into actual clinical trials. Those are all potential drivers that could significantly alter the company's trajectory down the road.
This all sounds like such a high-stakes game. What are the major risks someone needs to be really aware of if they're considering Aptevo Therapeutics? It's clear there are potential upsides. The science looks interesting. But what are the significant roadblocks? What could trip up an investment here?
The core question is really about sustainability. The company faces significant company-specific challenges, primarily financial. Consistent operating losses, negative cash flows, that's the main concern. It suggests long-term viability issues without continuous additional financing. It's that recurring theme for clinical stage biotechs. They're constantly on the hunt for more capital just to keep the lights on and the trials running.
And if they keep needing more financing, that money has to come from somewhere, which usually means diluting existing shareholders, doesn't it?
Precisely. The recent equity offerings and warrant issuances strongly suggest significant future dilution risk for current shareholders. Every time new shares are issued to raise capital, the ownership stake of existing shareholders gets proportionately reduced. That can be a major hit to your investment value. Also, even with those promising early results for mipeltamig, clinical trials inherently carry huge risks. They might fail to meet their primary or secondary endpoints later on, or show unexpected safety issues in larger patient populations. Either would have severe consequences for the company and its stock.
Okay, so significant company-specific risks.
Yeah.
Beyond Aptevo itself, are there broader industry risks that could impact them, regardless of their own progress?
Oh, yes, absolutely. The biotech sector itself is notoriously volatile, heavily influenced by these binary clinical outcomes. One trial result, positive or negative, can send a stock soaring or plummeting overnight. There's also increasing competition in the bispecific antibody space. While it's a growing area, more players mean more competition for market share, even if Aptevo's products do get approved someday. Regulatory hurdles, especially the FDA approval process, that remains uncertain and lengthy for novel therapeutics like these. It's another layer of risk and time delay. And lastly, broader market sentiment towards speculative biotech investments. If investors pull back from risky assets in general, even promising companies like Aptevo could suffer across the board, regardless of their specific news.
Okay, so after digging into all these factors, the financials, the promising pipeline, the extreme volatility, the hefty risks, the potential catalysts, what's the final assessment for Aptevo Therapeutics? This is now a good time to buy for our listeners. What's the takeaway?
Our sources give Aptevo Therapeutics a rating of 4 out of 10.
4 out of 10, okay.
The rationale is basically this. While the company shows promising clinical data for mipeltamig and has an interesting pipeline, its poor financial condition, the consistent cash burn, the extremely small market cap, and that very high volatility make it a high-risk investment, a very high-risk investment. And that single analyst price target, as we discussed, it appears Well, unrealistically optimistic given the company's current financial trajectory and market position.
So who is this stock best suited for then? And who should probably steer clear?
It's best suited for speculative short-term traders, people with a very high risk tolerance who can try to capitalize on news-driven volatility. They'd be looking to make quick entries and exits around major announcements like trial data releases. It's explicitly stated as not suitable for long-term investors seeking stable growth or income. If you're looking for a steady, reliable return, this is definitely not the place for your capital.
Makes sense. And if a speculative short-term trader were to consider it, despite the risks, are there any suggested entry points or risk management strategies mentioned in our sources?
For that kind of short-term trading, the recommended entry price range is suggested between $3.50 and $4.50. Ideally, maybe following pullbacks after positive news catalysts have caused a spike. For anyone considering a long-term position, despite the overwhelming risks, which isn't recommended, but if they were below $3 near the 52-week low is suggested, just to provide some margin of safety against further declines. Recommended stop loss for short-term trading is $2.75, just below that 52-week low. To cut losses quickly if it breaks down further, take profit targets are suggested at $7.50 to $8 for a 50-60% gain on the first target, and a second, much more ambitious target of $12 to $15, but that would likely require significant, impactful, positive clinical news.
Right. Very aggressive targets for a very high-risk play.
Very much so.
So what does this all mean for you, the learner, navigating these complex investment decisions? Aptevo Therapeutics is, I think, a compelling case study. It illustrates how clinical breakthroughs in the biotech world can exist right alongside significant financial instability and extreme market volatility. It's a powerful reminder that innovative science doesn't always translate directly into a stable investment. Not immediately, anyway.
And this analysis underscores that even with exciting medical advancements, the investment landscape is really nuanced. It forces us to consider the often stark difference between, scientific success in the lab and sustainable corporate financial health.
We hope this look into Aptevo Therapeutics has given you a clearer picture, equipped you with the key insights to think critically about these kinds of investment opportunities. We've explored the highs and lows, the science and the finance, the potential pitfalls, and the potential, albeit risky, opportunities.
So here's something to consider. In the world of biotech, is a groundbreaking drug always enough to guarantee a successful investment in the company that discovers it? Or are the fundamentals, the financial health of that company, ultimately the deciding factor for investors? Something to ponder as you continue to explore the market.